What's up guys? In today's video, not only do I have a whole new workstation here for you, charts, motivation, but today we're going to go over why penny stocks are great for beginners that are just trying to look at either day trade or grow a small account. So with that being said, let's jump on over to the computer and let's get started. Okay guys, so the number one reason and where we're going to start with why you should trade penny stocks over other ones, or in my case, what I call penny stock is a lower price stock. So not always technically a penny stock, but I trade anywhere between 50 cents to $10. My sweet spot is that dollar to probably $3 range is really my sweet spot. But anyways, number one is they're very, very easily manipulated. And today I'm showing you this one right here. It's BIOC. You can see these things are very easy manipulated, and with the patterns. So manipulation, so if a millionaire buys into this thing is going to go crazy. Now, that's complete manipulation based off of news, catalyst, and also you can have people that manipulate it down here. You can see this where they sell a ton of shares, or I mean, they're trying to buy a ton of shares. I was right the first time, sorry about that. They're trying to sell a ton of shares at a price that's lower than what they really could be asking for it, creating a huge block or what they call a resistance point. Sorry about that. So number two, they're failing companies. I want to keep this video as short as possible, so we're going to move through these pretty quick. So number two, these are failing companies. So a lot of these are going to fail. So a lot of these a gap up or run up real early in the morning, you're going to see are going to fail. And just so you guys know, I am on real live data. Look at this. Yeah, I know you haters keep pointing it out, but I'm still on real time data. But anyway, so we're going to move on quickly to the third point. It makes it way easier to predict. And we're going to put all three of these together. So basically what I'm showing is you're going to look, my scanner shows me what's moving early in the morning. So I can see that this one's already gapped up here. You can see it ran up the other day, fell down, got some news, pushed up again here, fell down, and then tried to push again, but it didn't make it up here where we were looking for. Because if this is going to be a breakout buy, it needs to break this and run up. So as you can see, it fails. It actually dips further than this one, and then it runs back up, basically double topping pretty much. That's a double top if you ask me, and then fails again. Now I was able to make money going short on this. How you guys are able to make money with Robinhood going short on this is it's not actually going short, you're buying a put option. A short-term put option that allows you to make money on the downside. Now, with that being said, that's going to move us on to the profit margins portion of penny stocks. If you're trading something such as Southern Company is one that I like to trade as a swing trade. And you can see I have a trend line from a long-term trade chart on here. If you buy one share of this, that's $53.56. Now, if you buy one share of this at $1.41, or right up here, let's just say where I was at in $1, probably 60 range. I don't remember where I was at. I know I was doing it in this one. Let's say $1.60, and then all of a sudden I'm able to cover it. Even if I cover right here when the market opens, when we have this nice big fall down here into this support line, I'm still $1.51. That's 9 cents a share. That's still better than the average. Or what I did was I waited for it to come back up again. It did test it. I'm still up, or I'm down a few cents. That's nothing big. Falls down again. I get into the bigger pool. I make more money. Now, with that being said, I could have held it even longer. I did not do that. I don't hold all day. That's not my thing. Now, this also ties into starting accounts. If you're trying to learn how to trade, you should not be going with thousands and thousands of dollars in your account. I did it. I screwed up. That's why I'm telling all of you there's really no reason to. what you need to do is around $150 to $300, money that you can lose. And some of you are going to expect to lose it. Now, I'm not saying to go and lose your whole $150 to $300, but at the same time, it allows you to learn how to control your emotions, first of all. And second of all, learn how to trade with real money, see how free trading Robinhood apps are not always the best when it comes down to execution, so you may have to learn how to deal with those things. Those things do make you a better trader, learning how to deal with those. So if something, when you move up to a different broker, such as TD Ameritrade or E-Trade is the one that I like to use to short, and then you already have that experience of dealing with it, and the customer service just gets way better when you go to a bigger trader or a bigger brokerage like this. So with that being said, I mean, I have a couple of scanners. This one was the one from today. It's going to show a bunch of big movers. But those are the 5 really main reasons why you should start learning how to trade penny stocks rather than all the others. Because most people in America are going to start small, which nobody should be throwing in 100 grand and expecting to become a millionaire overnight. It's not realistic. It's not smart. That email. But anyway, you need to start with a small account. That's why I recommend all my students. You can ask any of them. That's where I recommend to start so that you can go and maybe you do lose a couple times. I'm not saying put your whole $150 or $300 into one stock and day trade that 3 times a week. I'm saying you can take a position and you can day trade it. Maybe you only use $100. And then the next day you use another $100. And the next day you use another $100. So it's going to be very small, but you need very small gains, but you need to be using percentages to track that. Just like if you are using, let's just take one of these bigger stocks, for example. I don't even have any. Let's just take the one that I used earlier, Southern Company. For example, you need to be looking for percentages, not just the dollar amount when you're starting out. Percentages are a way bigger objection, and they make you feel a whole lot better, especially when starting out with a small account, and maybe you're not making near as much. So with that being said, that's going to be today's video. This is my second time recording this because the first time the format of the video was not correct. So if you guys enjoyed this, please give it a thumbs up. Love to hear you guys, what you guys think about it. Leave a comment below. I'd be more than happy. I'll reply back more than likely. So I'll see you guys in the next video.